What's going on, guys? Welcome back to another video. In this video, I've got another extremely important AMC update to bring all of you this evening. So what we're going to be covering in this video is a very important update on the forced share recall situation that I have gone over in a couple of my previous videos. Now, recently, we have received some more information about this situation, and it kind of clears up some of the data points that we were looking at that really didn't make a lot of sense, specifically the utilization numbers that Ortex was giving us. Now, it didn't make a lot of sense that we were seeing the utilization go from 100% all the way down into the 20% range, and I did give a couple of reasons for why this might be, but we have some actual concrete evidence and proof coming from Ortex as to exactly what is going on with this situation. We are also going to go over how this forced share recall situation plays into the failure to deliver numbers and how this is going to affect options in the near future. So we have a lot to cover in this video, so make sure you guys stick until the end. And before we get into all of that information, if you guys would like to earn 2 free stocks with Webull, valued up to $1,850, make sure you check out that link down below in my description. All you have to do is sign up for an account, deposit over $100, and you get access to those 2 free stocks. And if you guys enjoy the information and analysis that I provide for you in these videos, make sure you drop a like on this video. So when we're looking at the actual share price for AMC, we are having a pretty significant red day. But again, you have to remember what we have actually done over the past couple of trading days. We've gone on a massive green streak, and about a week ago, we were trading in the $9 range. We are currently, at the time that I am recording, sitting at $12.63, or down about 10% on the day. A healthy pullback, in my opinion, of this size is not bad at all for the situation that we have coming up. We can't always have this massive uptrend. Even when the squeeze actually kicks off, we are going to see some massive run-ups and some massive drops in the share price, and you do have to prepare yourself for all of this volatility. Now, we are still calling this $14.50 mark a very important key level because of 2 reasons. So that is a very technical level. It's the last time that AMC made a new high, and we need to break above this level and actually stay there. Now, I just said that was the last time that AMC made one of these new intraday highs. We did see AMC go into the $15 range in an after hours trading period, but that was not very well withstood by the overall market. So for those of you that were not able to see this previous video about the share recount, we do need to briefly cover exactly why utilization is so important. So when we come over to this Reddit post right here, shout out to this individual, LE Matt N, the utilization loan recall in Ortex tweet, we are in the eye of the storm already. So the too long didn't read. Domino day started days ago, meaning the first couple of dominoes have fell in this situation, and we did not recognize it. So utilization is a factor which we thought was big, but in reality, it's not even in its final form. So the utilization is essentially the amount of shares that institutions are willing to loan out versus the amount of shares that have been loaned out already. So we went over the paper that this Reddit post cites in my previous video, but essentially what the paper says, for stocks with utilization above 75%, forced recalls occur about once in every 26 days, or every single day there's a 1 in 26 chance that a forced recall situation would occur. Now, what essentially happens here is that when utilization gets as high as 100%, these institutions don't have any more shares to lend out, which puts them in a very interesting situation. They can't get any more shares in order to lend to their clients. What they have to do then, because they're over leveraged in this position and they don't want the utilization to stay that high for that long, they will perform these forced recalls and forcibly close out the positions of their clients. Now, this Reddit post goes into the T+2 situation, which we actually covered in my previous video, so we're not going to go over this again, but if you are interested, make sure you go and watch that video called Forced Share Recall Alert on my channel. Now, we did see the utilization number artificially go down from about 100% or very close to 100% all the way down to about 24-25% yesterday. Now, I thought this was relatively strange. If all of these shares were actually returned to the brokerages and there was a massive closeout of all of these short positions, I would have expected to see a massive rally in the AMC share price and the squeeze to kick off. So now we have this Ortex update for AMC today, a short interest update. The short interest is at about 16.11% of the free float, and the utilization is currently at 96.02%. And they actually made a comment about this when calculating the average utilization numbers yesterday. Data from some of the security lenders was missing and therefore not included in the calculation. This was an unprecedented issue and affected daily utilization rates across all 50,000 stocks we cover. We have ensured this can never happen again. We continue to pride ourselves on providing the most timely and accurate security lending data available. Huge apologies from the Ortex team. So this was just basically a clerical error where the information that they were getting was not fully complete. Now, this just goes to show us basically what I've been saying over the past couple of weeks and months that I've been covering AMC, that you do have to take all of this data with a grain of salt, meaning that you can't always fully rely and trust the data that you are seeing. The thing that I always look at in these different data reporting sites such as Ortex or iBorrowdesk is the trends in the numbers that we are seeing. We all know that there is naked shorting going on the market for AMC, so these short interest numbers are most likely inaccurate, and the short interest is actually much higher than we think it is, but it is still very important to watch the trends of where these actual numbers that are reported go. Now, switching gears back to what we were talking about earlier in this forced share recall situation, you have to think about, what if all of these shares that were loaned out to these institutions were fake, not real shares? These were some of the institutions that were participating in the naked short efforts to artificially push down the share price of AMC. If those shares end up being forcibly recalled, the institutions and the hedge funds and anybody who is shorting AMC cannot get their hands on these shares because they do not exist. Now, when we come over here, this is going to lead to what is called a failure to deliver. Now, I've brought up this chart many times in a couple of my previous videos, and what this just shows us is that on some key days, mainly around when the monthly options expiration date occurs, we see a massive spike in the failure to deliver numbers. Now, this could be for a variety of reasons. Maybe some options are going in the money and these institutions do not have the shares in order to cover these positions, and that would create a failure to deliver. Or this plays into the actual part of the naked shorting where one party wants to close out their position and the other party is not able to deliver on their half, creating a failure to deliver. Now, when we come over here, we actually have a very interesting situation that could be occurring today. So the final battle has begun. Hedge funds must buy synthetic shares by May 19th. So shout out to this individual, Humble Design 921 on Reddit, for putting this out there. This was about 21 days ago. So he links below a lot of different links for how he found this information. Now, I'm not going to go through all of these different regulatory filings with you because most of these are incredibly long, and this would make that would make this video hours long. But this is a very important situation. If these hedge funds actually have to cover all of these synthetic shares today, this could create a massive volatility spike within the T+2 period of settlement. So if they have to cover today, the actual shares will not actually be reflected in the actual transfer will not be complete until Friday. So Friday, even though there is already a monthly expiration date happening on Friday, we also have the possibility that the T+2 settlement day for the settlement of all of these synthetic shares is going to be happening that day as well. Now, again, this is not me coming out and saying that the squeeze is going to happen by Friday. I am just trying to provide you with all of the up-to-date information and all of the information that we currently have and how it could potentially affect the share price of AMC in the near future. The squeeze is still very much a possibility in the near future. But again, in my opinion, I am preparing to hold these shares for a significant amount of time because I actually like where AMC is headed in the near future and in the actual future as well. I think that they have the possibility to actually come out with a streaming service, and I believe that they are one of the best reopening trades out on the market. Now, I also want to briefly touch upon some options theory and what we are seeing on this monthly expiration date. So we are seeing a very high amount of open interest on these 13s through the $15 strikes, and a significant amount of volume on these contracts today. Now, this could be people gambling, speculating on the share price of AMC. We could see another massive spike going into the next couple of trading days this week. We may or may not see this, but that is most likely what is occurring with these strikes that are happening from the 13 to the $15 strike, and all of this volume occurring today. Now, we also see an extremely high amount of open interest on this $20 strike and the $29 strike as well. I've said this a couple of times in my previous AMC videos, and I want to make this very clear. I am not saying don't buy options, because options on AMC are a great way to actually boost your cash balance if you have a significant gain on these contracts, and then you can go out and buy more shares of AMC. But if you are gambling on these $20 strikes, these $25 strikes right here, or even these 29s, the odds that these are going to go in the money by expiration are extremely low. And where does this money go when these contracts actually expire? Right back to the institutions who sold them to you. So you are actually padding the cash balance and the balance sheet of the institutions that are selling you these short time to expiration options if they do not go in the money. Now, options are incredibly risky regardless of what stock you are trading them on. But in my opinion, again, this is not financial advice. If you are going to be trading options for AMC, I think the smartest way to go about it is to get yourself enough time. What I am looking at for options is I have about one contract right now for this January 22nd expiration date at this $40 strike. I bought this a little while ago. I'm up about 100% on this contract right now, and I'm looking to buy more over the next couple of weeks. Now, the reason why you want to buy contracts with a long time to expiration is that theta decay is not going to hurt you as much. And if we see a massive spike in AMC well before this expiration date, these options could massively inflate due to the implied volatility being baked into the option premium. So that is going to conclude this update for AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.